Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Happy Saturday, everybody. Welcome to the show. I'm your host, Greg Tilley. What a
host, Greg Tilley, eh?
On our Thanksgiving weekend. Yeah. Happy Thanksgiving, everybody.
Yeah, no kidding.
Did you get any going to take pictures this week? And are you the Greg Tilley, the host of the Real Estate Mortgage Show?
Not this week, but I had two the previous week. I'm feeling quite famous.
You should get some Paul Rushforth caps and just maybe autograph them and then
just hand them out to people as they. All right.
Well, so he always wears the Paul Rushforth Real Estate swag every time he goes into a shoot. But last week I'm driving by and Greg's going into a house and all I see is on the back in bold, host, the Real Estate and Mortgage Show. He takes off the Paul Rushforth swag and puts on host.
Well, that actually reminds me, if you have a question and you can't call in, just go to realestateandmortgageshow.com and you can submit your question there and we'll get it answered on the air for you, no problem.
And you know what? My assistant Jocelyn sends it over right away. So, I mean, if you get on there sooner than later, we'll probably answer it today on the air. If you have any questions, you can't get to the phone to ask a question, but you can get to the computer. And someone who's
shy. People are shy. They don't want to ask that personal financial question or real estate question on the air just in case somebody knows them and recognizes their voice.
Well, it reminds me.
Well, I had someone actually last week. I had someone last week who said, you know what, I'd rather go on the computer and send my question that way because Frank's not the nicest guy, and so he'll probably eat me alive if I ask the question the wrong way. And so
stop it.
Now you, Paul, you're just a true gentleman, but Frank is just a different breed.
Oh boy.
Well, speaking of calls, last week, just to kind of finish up the show, we had a call from Bob, and Bob, sorry again, we had to cut you off at the end, but man, Steven, producer. He's all over me, man. I can't, if I don't get the show done at a certain time, I'm in big trouble. So again, sorry, Bob. You know what? Bob was bringing up a really good point about
service
levels. And he'd had different experiences with different agents over time. And my thought over the week was that certainly there's good and bad in every business.
100%.
In every industry, in every sector of the economy. But in terms of real estate and mortgage brokers, I'll go to you first, Paul. What should people be asking? What should they be looking for when they're choosing a real estate agent?
Well, first of all, you want to know the agent's metrics, right? You want to know their stats, like how close are they getting to asking price? How many homes have they sold? What's their marketing plan? How long do their homes sit on market? What is the last question you ask is, oh, by the way, what is your fee for service? Never start with that question. I think there's too many people that start with, basically, how cheap are you? That's the worst question you can ask. You want to find out what someone does first, and then you ask that question. The other thing that we're noticing in our industry, and I know, Frank, your industry as well, is we've kind of opened the borders a little bit with people who can come from different not provinces, but different cities in that province to do real estate in our board. And we are running into a little bit of a snag with, if you're not listing local or someone who just knows the Ottawa real estate market, you're making a big mistake. I think, Greg, you and I were talking about a week ago about a situation where someone bought with an agent who's not a local agent, and they way overpaid for the property. Now they're trying to sell it, and we're almost $100,000 under what they actually paid for the property because they didn't buy with a local agent. And listen, a lot of times you have friends who are wherever in Belleville, Toronto, wherever you want to be, and you want to buy with your friend and all that, but you want to make sure they know the intricacies of the market, right? I mean, I know that we've had some bidding wars, especially during the COVID times, where, an agent who wasn't local, who didn't know really what was going on in the Ottawa market, their offers were nowhere near as competitive as a local Ottawa realtor because, I mean, we were getting offers and, from agents outside of our board that were, 10,000 over asking, 5,000 over asking during times where homes were selling for 100 and 200 over asking. So if you don't know the local real estate market, you're making a big mistake. And I think we're seeing too many people who are either listing or buying with agents who don't really know what's going on in our Ottawa market. And that is a major mistake. I mean, my job is to study the Ottawa real estate market. Frank's job is to know what's going on in Ottawa and mortgages here locally, where you have a lot of times you have people coming into your space from outside of our city as well too. Yeah,
of course. I mean, online brokerages are big these days, and I'd like to think it happens on the real estate, and that's why GTA brokers are probably getting business here in Ottawa because they're promoting themselves online and they are provincially licensed. So as far as the consumer is concerned, maybe they can look after my property here in Ottawa as well. But you're right. I mean, if you don't know the area, it's very difficult to be able to trust somebody to list your house or sell your house. And in our business on the mortgage side, here, these online brokerages are all about, like, you might get a better rate with them, but they're not giving you any advice as to what you should do and what could happen in the future. And it's no different with the banks. I mean, I worked at a bank and I gave unilateral advice based on what was best, what I thought was for the client, but really in the end, I was giving advice that the bank taught me to give them, which was in their benefit. So, working with the mortgage broker is a little bit different from a service level. And what Bob experienced on the real estate side, on the mortgage level, we get a lot of it. I just go to my bank. I don't know how many people have been to the bank lately, but boy, getting an appointment or trying to see somebody at the bank, calling a bank is impossible. Like, unless you know that direct extension, you're going to wait 10 minutes before you get to somebody.
Your call is very important to them.
Yeah, very
Please stay on
but
the
Frank,
line.
even I go into my branch, I'm not going to say what bank I'm with, but I go into my branch and I never really have to go in too much. It's only if there's something where I have to do something important, I have to go to one of the tellers. Oh my God, you're literally waiting for 30 to 40 minutes sometimes to see it. There might be one person working.
And you're a nuisance to them. Like, they make you feel like you're bothering them. Like why are you here? You can call the 1-800 number and do it there. Or you can go online. The personal service is out the window. And I think, with Bob experience, certainly. But Bob also needs to understand that the world has changed from the 70s to the 80s to the 90s to where we are now, where
For sure.
maybe the service levels that were offered in the 70s and 80s were normal, where they've gone away and they're not offered as much today, just because a lot of these things can be done by the people themselves. So you don't need a real estate agent to help you with. And not only that, I mean, there's legal ramifications too. And I think one of the things he talked about was, maybe changing or zoning or
am I able to do this on this property?
Where real estate agents cannot take that risk anymore because they're bound, where their license could be in jeopardy should they give the wrong advice. So where in the 70s, it wasn't as much of a thing. In the 80s, it wasn't as much of a thing. Today it is. So,
but being connected with those is very, very important. Like if someone says, tell me more about this zoning or this or that, I can tell them all about it. But if there's a question that is not my expertise, it might be a mortgage expertise, it might be a lawyer expertise, I can still guide them. I think one of Bob's frustrations was like the real estate agent just said, well, I don't know, call the city or something like that. Like that is not an educated realtor. An educated realtor would say, here's where you go for this. Here's how you do this. Hold their hand to get them the right answers to do that. And I think the one thing that we're running into right now, the course now to get into real estate, like I mentioned last week, is extremely tough. It's really, really tough, which is amazing because the education of the realtor now is so much more advanced. Saying that, you still come out of the course lacking the skills to sell real estate. You really do. But it's any course you do, right? So, the training process is really, really important. And I said, I have my son going through it now. He came out of the real estate course, passed it, but he's like, what do I do now, Dad? And I don't blame him. I'm like, I get it. Like, what do you do now? So my training process with him, we just started with him. He'll still be training in February. He's still going to be training in February because I want a young agent or someone to be so well educated that you think he's been in the industry or her in the industry for 5, 6, 7 years because they're able to answer all the right questions. And there's nothing worse than having a consumer and you're asking the questions and you don't have the answers. It's like going to a stockbroker and saying, what's the Dow at today? And he's like, oh, you know what? Let me just check. How's Apple stock doing in the last couple of months? Well, you know what? Let me just check. He doesn't know the answers. Are you going to place $20,000, $30,000, $40,000 with the stockbroker? Probably not. Same goes with real estate. Same goes with mortgages. If they ask a question and you can't either answer it or direct them in the right way, do you really want to spend that much money dealing with someone? Or do you really want to be listing your house with someone who doesn't know what they're doing or doesn't know the right answers? And I think a lot of industries have those issues right now. And I think to your question, Greg, we have a lot of people who are trying to do business in the Ottawa area that aren't local realtors. And it is a bit of a challenge. It is a big time bit of a challenge. I called one the other day. I'm not going to say where, but I called one the other day and I said, can you tell me a little bit about your property? And they said, besides what I see on the MLS. Well, it is in Napion. I said, you mean Nepean? Yeah. They're there. And I'm like, okay, this is someone who's representing a property. He doesn't even know what area it's in. Can't even say the area properly, right? So this is your biggest investment. I think that the thing I read last week with Chris Smith, who's the author of the Conversion Code, who said it the best. Like, you're not buying something, a $2 thing at Walmart. This is your biggest investment, your biggest transaction of your entire life. Like, you need professionals helping you. So,
and having that local edge is
local edge is
a big deal.
everything. Is everything. I mean, you have to know the local market. You have to, right?
Well, professionally, I would rather have a professional, mortgage broker or real estate agent tell me upfront if I ask a question, I'm not sure, but I'll find out for you.
Sure.
Right? Like, and that's, you can't be expected to know everything about everything, and especially with.
But if you say, well, just go call this person, that's not the answer they're looking for. If you said, listen, there's times where someone will ask me a question. I'm like, you know what? I don't exactly know that answer, but let me get that answer for you.
Yeah. I'll give the city a call and find out.
Let me call the city and get that answer for you. Yeah, and that's what they're looking for. And I think Bob's frustration last week was that one of the agents he worked with years and years and years ago was kind of like, I don't know, just go do this, or I don't know, I just figure it out. Like, and that's not guidance.
Right. Your realtor or your mortgage broker is supposed to be your partner in this transaction, not,
And not answer every question, because they may not have the answer, but they should be able to guide you as to where to get the answers for those questions at the very least. And like I said, sometimes there are legal reasons why we don't answer. A lot of times I get asked some questions. I say, I think that's a question that's best answered by a lawyer, whether it's a real estate lawyer, because they know the intricacies of what's going to happen should you decide to go in this direction. So where I'm not versed in that, that's not my area of expertise. So.
Well, speaking of questions, if you've got one and you can't give us a call, head over to realestateandmortgageshow.com or give us a call, 521-TALK, 521-8255. We'll be right back. Welcome back to the show. Right to the phones we go. We got Lisa in Ottawa calling about mortgage defaults. Hey,
Morning,
welcome
Lisa.
to the show, Lisa.
Hi there. I called a few weeks ago. I had a question, I guess, about mortgage demand and stuff.
Yeah, I remember the call. I think Frank wasn't here.
Yeah, that's right.
Do you want to just quickly give Frank just a quick Cole's notes before he asks the question?
Sure. Okay. So what had happened was we had a restrained mortgage, and we
had a what mortgage? Sorry,
a restrained HELOC mortgage.
Restrained. I haven't heard that term.
Well, it became due.
Okay.
So and we hadn't renewed, and we were paying it at the bank every month.
Yeah.
But what had happened was sometimes the teller would apply it to principal and interest, and other times they'd apply it as a lump sum.
Okay.
So it appeared that we hadn't made some payments.
Because they coded it incorrectly.
Yes.
That's correct.
And I think at the time they were looking to, you were in trouble with your property, right?
Well, they sent a property management company here to do like an occupancy check, and they took pictures of the house and the cars, and they sent us a demand letter giving us 10 days. We received it 5 days or 6 days before it was actually due. They demanded the full amount of the loan. They canceled all our credit products. They told us when we redid the mortgage, they would reinstate all our credit products. And when we did so, they elected not to reinstate all of our credit products. So we thought we were over a barrel. We had like 5 days. So we went ahead and renewed, but we just took the smallest term possible.
Yep.
So ultimately the mortgage will be up in June again, and then we're bye-bye. But
stupid question, Lisa, stupid question, but why were you literally physically going into the bank to pay the mortgage? Like, why wasn't it just being withdrawn out of your account?
Well, that was a tactic to make us renew the mortgage. They stopped. They said they were going to not permit us to do that. So every time when my husband would go in, he'd spend 45 minutes at the branch. They'd have to find someone who could override and process the payment.
It just seems so silly, like so inefficient. And
yeah. Well, the last time that it had happened, my husband went to 2 or 3 different branches, and he had spent like 2 hours in the day trying to get this done. And I had called, I guess, their mortgage recovery people, and just to try to see what we could do, because like he was getting upset having to do that. And ultimately we learned that the next day our products were canceled. I didn't know that a letter had been issued, Like I thought that before, when you break a watch, you don't go to the president of the company. You usually go and get it repaired, right? Like,
Right.
the demand letter was.
But stupid question,
Okay,
Lisa.
call
Why don't
out
you
the
just
bank.
renew the mortgage?
Call out the bank. Who's the bank?
TD Bank.
TD Bank, eh? That's interesting.
It's a HELOC mortgage, and then so they said, okay, well, we'll renew the mortgage, and they said, well, we're not going to renew but we're not going to. We're going to freeze the line of credit.
Did you call Sherry? I know Sherry, who was replacing Frank that day, gave you her number and said, call me on Monday. Did you call Sherry?
No, I didn't, because we only had like 5 days to do it.
Right.
So,
Okay.
So they renewed you for 6 months, but froze your line of credit, is what it sounds
They
like.
say they renewed it for 3 years because the mortgage was actually restrained for 2 years. We've been going in and paying it.
Yeah, I don't understand how they didn't send you a renewal notice and say,
I
here
never
you
got
go,
one,
let's
and I
renew
never
the
got a
mortgage.
letter. That it was all or nothing, all at once.
Yeah.
And I'm just
Very
wondering-
difficult too, right? Like I'm sure, like I can sense all your frustration in this, and because you go to the branch and you don't, like, somebody will process it, but they don't know how to get you out of this jam that you're in.
Yeah.
Or what you really need is somebody to say, okay, like, you shouldn't have to do this every month. Here's the solution to get us around doing this, and it shows on the system that your mortgage needs to be renewed. Let's figure out a renewal instead of making you or your husband go through what you guys have gone through.
But the problem is no one took accountability for it, right?
No, they never do, though. That's the problem with a lot of the big banks is that, the old pass off, well, let me see if I can find somebody that can help you with that. And then they never do anything about it. And then it's you having to follow up, right?
Yeah, well, they say they're going to investigate, like, why it happened at the branch. And I'm like, I don't care why it happened at the branch.
Yeah.
I care what you've done to us.
Yeah, here's my bank
that's
account.
what I
Just
want you
take
to
the payments out of
investigate.
there, right? That's it's a simple solution.
I've never heard of anyone going into the bank to pay a mortgage.
No, I haven't either because you can't even set up a mortgage today without. So I know that I've heard scenarios where, some of the lenders, and I remember, I think it was First Line that was associated with CIBC, and they're trying to switch everybody to a CIBC product instead of the First Line.
Yeah.
And what they'll do is at renewal time, they won't give you discounts unless you switch to CIBC, and they do that kind of stuff. But, I've never heard of a bank like TD or Royal Bank or Scotiabank doing this.
The big boys, yeah.
Yeah, they're usually very, very good at the renewals. And if they don't want to renew your mortgage, then they say to you, hey, go find a mortgage somewhere else. We don't want to renew you. At least they're upfront and honest. This just seems like it's out of nowhere. And again, I mean, you go to the branches, unfortunately, today, and they have very little pull to get solutions. So all the solutions have to come from an office out in Toronto. And what happens is, and there's some really good employees at the banks that try, but they just get handcuffed where they don't know where to go anymore. They don't have an answer for you. So the easiest path is they just ignore the client and hope the client finds somebody else to help them. But it's just not good service.
This is Bell Media. Maybe they could do a story on this, and who knows, right? Who knows? I mean, it's
well, I think this is what kind of inspired it because the bank was giving me such a hard time. I threatened to go to Pat Ferran, and then the next thing we know, my husband's trying to order his medical supplies, and the visa's not working, and he's very good about paying everything. Like, he's Italian. He's there 2 hours before it starts. You know what I'm saying? Where this is.
For some reason, Frank is now willing to help when he said he's Italian. Frank, just come over for Thanksgiving dinner on Sunday to Frank's house, and he'll take care of it.
No turkey. We're Italian. No turkey at Thanksgiving. So
yeah.
Lisa, you mentioned that it's coming up again in June.
In June, yeah.
Okay, get in touch with Frank as soon as possible.
Get ahead of it. You got to get ahead of it. Like, I know Sherry was.
Is it too soon, or should I
Well, it's too soon now. If it's the only time it's not too soon is if you're in an open type of product where you can pay it off any time. Which, I suspect that if they're treating you this way, maybe TD will say, hey, if you find a solution somewhere else, hey, just pay us out. We won't charge you a penalty. And if you can get that in writing, then it's not too soon if you want to get out of it. But if TD is going to take advantage of you even more now and say, well, if you pay us out now, we're going to charge you this penalty, well, let's not reward them for their failures.
No, I feel like they played dirty pool with us, and especially holding all the credit products over our head, and then turning around. I was like, no, boo boo. Now we're not going to renew the And our credit too. They say they can't do anything about our credit rating and they closed our accounts. That affects our credit rating.
It does. You're right. So I'd be curious to see how much it's impacted your credit score, because that could limit some of the options you have available to move your mortgage elsewhere.
To be honest with you, I think rather than waiting to call Frank closer to renewal, you need to get on top of this and get in to see that branch manager or some banking manager and get this rectified ASAP, because you wait till closer to June and you call Frank, it may be too late. It may be too late.
And possibly a lawyer.
Yeah.
Yeah, that's what I was kind of thinking.
Or bring Pat Foran with you into the branch and see how that works out. See how that works out for them. So,
right.
Hey, Lisa,
Thank
thanks
you
for
so
the
very
call.
much.
Really appreciate it.
Thanks,
and
Lisa.
Good luck on all
reach
of that.
out, though. Reach out to us if either Sherry or myself if you want some further assistance.
Awesome. If you have a question, head over to realestateandmortgageshow.com or give us a call at 521-TALK, 521-8255. We'll be right back. Welcome back to the show. All right, Frank, we had some job numbers come out this week. How are things looking?
Weren't those rosy job numbers? Weren't those incredible? Like
It was
everybody,
surprising.
economists all raised their eyebrows and said, "What? What? Say that again?" I mean, the expectation was that maybe 5,000 or 6,000 jobs were going to be created, and lo and behold, the net was a little over 60,000. Now, most of them were in Alberta, so Alberta did very, very well. A lot of full-time jobs created. Manufacturing somehow created a lot of jobs, which has been a big concern because of the tariffs and taking jobs away from manufacturing. Yet, for some reason, the month of September generated lots of manufacturing jobs, lots of jobs in Alberta. Part-time jobs took a hit. Full-time jobs did extremely well.
Which is shocking, because people are starting to hire those part-timers for Christmas now, are they not? Close?
November.
Close,
I mean, not quite September, October, November. I think we'll see.
So good. Listen, job report, great for the economy. For interest rates, though?
Well, it's not supposed to be good. That being said, I mean, the markets kind of raised their eyebrows, too, and said,
where these numbers come from?
I don't know. Yeah, these numbers don't sound realistic to us. We get it. That's the job numbers that are being reported. But normally the bond market on a month like that of job numbers would have spiked big time. Yet it remained fairly flat. So I think the bond market is questioning these numbers. I think the bond market is questioning, wait a second. So the month before we lost 5,000 jobs and the unemployment rate went up 2 ticks or 0.2 of a point.
What was it at, 7.1?
7.1.
Right? Yeah.
And now we generate all these jobs and the unemployment rate doesn't change. Like it doesn't even come down a tick, maybe even 2 ticks or 3 or 4 ticks. It stays the same. So again, this is where, you gotta believe in numbers and statistics. And there's a lot of people that question the statistics that come out. The U.S. job report never came out. There's lots of stories I saw this week where military people are standing in line at food banks. Yet ICE agents who are, doing whatever Donald Trump wants them to do in these cities just got $50,000 bonus check. So this is the kind of, things that concern markets, bond markets, because they see these kind of postings and they question what's really happening out there.
Well, and our job numbers in Canada have usually been somewhat fairly accurate compared to what they go through in the States. I mean, I remember when
there's no revisions.
Well, we remember when Trump
Right.
came into power. The first, I think there was like like 1 million jobs created, and they went back and revised it, and they actually lost 200 grand or something like that. Like it was so off. Whereas in Canada, we don't see them off this much. Where this seems a little bit off to me.
Yeah, it feels
it's
off.
surprising.
It's surprising. It shocked the market. The market was not expecting. So the bond market actually, for about a 20-minute period, went up 8 basis points. And within an hour, it was only up 1 basis point. So it came right back down to 7 because, again, this is where the markets questioned the accuracy of these numbers.
But it's still October 29th when we have a rate announcement. It's now looking like we're probably standing pat, right?
Yeah, but that was going to happen. We were 50-50 anyway. It's likely now more than 50-50 that it's going to stand pat. That being said, I think a lot of economists were eyeing December 10th anyway as the next rate cut, where in the U.S. it's going to happen. I think theirs is early November.
Well, is it going to happen?
Well, it's like the government shutdown. How does that affect all the numbers?
Well, it affects it tremendously because the job numbers now are over the top. Like you can't even be accurate with it because so many people are out of work right now. It's considered you're out of work. You've been furloughed. Basically, when the government shuts down, everybody that works for the government is furloughed.
Yeah.
which is another word for layoff. So basically, we don't even know how they could come up with these job numbers unless they haven't released the September job report, which is when the government started the shutdown. And then they're going to release the October one. And a lot of economists think that Trump is going to take advantage of it by saying the government's back and he's going to make it look like all these people got rehired, when in actuality, there's not new hires.
But Trump will call it his new hires.
But
look at the
Trump
job
will call
numbers.
it that.
Yeah.
So,
well, we're seeing here too. I mean, our market right now is so uncertain, mainly because of our government. We're seeing layoffs in our government, which we haven't seen in a long time, and we are seeing layoffs, and it's not all to attrition. I know they're trying to say it's to attrition, but we're seeing young people who've just got into the government who are being laid off right now. And I know our team, we have a number of people that we've been working with looking to buy homes, and they're ready to pull the trigger, and they're like, you know what, we're just going to hold off right now. So what's happening here in this economy right now too is really affecting our real estate market. Like it's turned. I mean, I was talking to one of my agents this week, and I said, I just put a property on the market, and I had tons of showings and sold at asking price. And I talked to him, and he's like, some of my listings have crickets. They got no showings on them. And I'm like, I look at the listing for him. I'm like, okay, it's priced right. It looks good. What's going on? Crickets. So it's a weird period in our Ottawa real estate market right now, and I'm sure it's going to be the same, maybe throughout Ontario and Canada, in the way that we're not getting the amount of showings. Showing time numbers are down. Property viewings are down, but homes are still hitting the market, as you know, Greg, because you're shooting so many homes. We're pouring homes onto the market, but there's a cautious feeling out there right now in our market where people are a little bit nervous to pull the trigger. Homes don't get me wrong, homes are still selling. I mean, we're having a banner month. We're already over 40 deals for the month. We're only the 11th. So, but homes are definitely selling. So don't be scared to say I can't put my home on the market now because it's not going to sell. Absolutely. It shows well, priced well, it's going to sell.
Wow.
It's a little bit, there's a cautious feeling out there amongst buyers. And I think especially young buyers. There's a very cautious feeling right now amongst young buyers out there.
Which again brings up, and I know, Greg, you always promote, hey, ask us a question. So we did get a question from Mike, who's an avid listener of ours and always has some input for us. But, Mike's question is more in relation to, we're about to hit about a 12 to 18-month period where more mortgages mature in Canada than at any 12 to 18-month period. And these mortgages, keep in mind, were for 5 years ago when we were at the peak of our market. The real estate market was going crazy. People were paying $100,000 over list and getting properties. But they were getting those properties with mortgages at 1.69, 1.89. And Mike's question is, if thousands of homeowners are renewing at 4%, how many of them are going to be forced to sell because of they're not going to be able to afford the home with the cost of everything else accelerating like it has? Can they keep that home? So what's going to happen to the real estate market? And if they're getting out of owning, so now they're going to become renters, is there enough homes out there that they're going to be able to rent? And is that going to drive rental prices up? And it's actually some really good questions, because I think Mike's not the only one thinking that way. Even in our industry, we think that way. So what's going to happen if all of a sudden we do sit down with a number of clients and they say, like, we're struggling already and our rate's at 1.89. And listen, I said last week that the payments aren't going to go double just because you're going to 4%, but maybe they can't even afford to go up $300-$400 a month. Maybe that's too much for them to take on.
Well,
so
we
you seeing some of that, Paul? Are you seeing people that are concerned about that?
So here's my view on that. First of all, you mentioned last week, Sherry mentioned a couple weeks ago that your payment is not doubling. I mean, Sherry did an example. You did an example where the payment went up by $100, $150 a month. Now, I'm not sneezing at $150 a month, because for some that is nothing. But for some, that's crippling. Like, that's their baby money, their grocery money, their this money. Like, absolutely, that is crippling. So I'm not sneezing at that. But what I am saying is it's not going up 1,000, 2,000. Like, it's not going to be that crippling like people think it is. Now, what is going on in Toronto right now, which is now creeping into Ottawa, is in Toronto, there's so many cranes in the sky putting up these towers. They've slowed down because the condo market in Toronto is depleted. It's terrible. It's awful.
Oh, I think we talked about that a few weeks ago, where if they can't get a certain number of pre-sales, they can't get their financing in place
Well,
to sell the condos.
So
and
to
banks
sell
are
them-
nervous. And banks are nervous with
But here's
condos.
what's happening in Toronto, okay? Here's what's happening in Toronto. Builders need usually 60, 65, 70% pre-sales in order to get a shovel in the ground. So I buy one today, and I'm hoping to get into that property very, very shortly. 2, 3, 4 years down the road, they still don't have the pre-sales because their condo market's so terrible. They have to have those pre-sales to put the shovels in the ground. So what a lot of builders are doing in Toronto now is they're moving to purpose-built rentals. Because if you have purpose-built rentals, you get the financing right away and shovels go in the ground. And so the Toronto builders, that is what they're doing. I'm now hearing there's some Ottawa builders who are doing the same, where what they're doing is they have a subdivision of, let's say, 50, 60 homes they're trying to sell, and they're turning part of it, into purpose-built rentals so they can get shovels in the ground easier. So I think that's going to help with the housing supply. I think that's going to help with the rental supply. But the one question Mike did ask is, what's going to happen with the rental prices? And yes, if we get more supply, it's going to help. The demand won't be as strong. But until we get a little bit more supply, we're still going to have a strong demand on those rentals. And I think people might see rental prices go up. I don't think it's going to be bad and drastic like what it could be. But I think the first part of that question is, I think people coming off these mortgages when they go to renew are going to be pleasantly surprised how it's not that painful. They've built on a lot of equity in their home because they've had such a great rate for 5 years. So it's not going to be as bad as what it could be. And then the fact that, builders are building more supply with purpose-built rentals. So that should help the rental market, not drive up the prices in the rental market.
Well, I really liked your example last week, Frank, where you were helping that client and, really consolidate some of their other higher price debt and
there's
unsecured debt.
That opportunity is there right now because there's some equity built in based on the fact that in 2021 house prices went up quite a bit. So therefore, anybody that had a mortgage back then, even if they bought with 5% down, likely probably has some equity to tap in. The concern will be more in 2027 when anybody that bought in 2022, they bought likely at the peak of the market, and therefore the equity may not have been built up just yet. So they're going to have a bigger problem than I think anyone that's maturing this year. That's why I think 2026 is such a big year for Canadians, because they're nervous about the economy. They're nervous about their jobs, even despite the job report yesterday. People are nervous about keeping their jobs. Let's call a spade a spade. We've all talked about it before. We talked about it before the show. Artificial intelligence, AI, is fantastic for anybody that hasn't used it. The problem with AI is that it's probably going to cost thousands of jobs because it does something that, normally would take a human 2-3 hours to do. You can get this done in 2-3 minutes now. So therefore, it's going to come at the expense of jobs. And so people are nervous about their jobs. So you're right. The consolidating, we're seeing a lot of it. We're seeing a lot of people saying, okay, how do I put my car loans in there? Because I'm accruing
high interest credit cards.
I'm accruing
Holy
credit
moly.
card debt every month now.
Yeah.
Like obviously it's costing me more than what I'm making. And I thought I had it pretty good. I've got a good paying job. I thought I was doing everything right, yet somehow I'm struggling to make ends meet.
Frank, we're already seeing those people that bought in 2022 in the Jan, Feb, March, and April, which was like our peak of our market. Our average sale price went over $740. We're now at $699.9. So it's a big difference. We're also already seeing some of those people calling us now to sell, and that's a tough conversation because I was with someone this week who basically paid $1 million for their house, and we literally, if we have to follow the comps, which we have to do, $850 is their price. That was crippling.
Yeah.
That was crippling. So, and some people have to sell. Now, real estate, I always say, is a long-term game. If you don't have to sell, if you bought in the first 4 months of 2022, you call us, you may not be able to sell. It might be a little bit tough. But we've gone through this before. When the condo market years and years and years ago had 2,300 condos on the market, flooded with the market, we were seeing people that were, were told they'd be able to sell their house for their condo for this once it was built. And I'm like, you can't even sell it for $100,000 close to that. Like you're way underwater. Some people held on to them. Some people had to take that loss. The first 4 months of 2022, we're now seeing that happening too, which is is tough. So if you don't have to sell and you're the first 4 months of 2022, I don't know if I would. I guess the only thing is you had a great rate, but because you bought so high and now the value's so low, there's a very good chance your payments on those people will be struggle. They will struggle at that point, which is unfortunate.
Well, and I think it's like how we ended the last segment with the call from Lisa is don't wait to talk to you professional. Get in touch with a realtor. Get in touch with your mortgage broker. And
too many times, Greg,
ask questions.
Too many times I get a call from someone who says, I really need to see you, whether it's I need your guaranteed sale or I need to see you because I have to sell. Well, why do you have to sell? Well, I've already got 3 letters from the bank and they're coming to take my home in 3 days. I'm like, I can't help you. Like, I mean, I could try, but I can't. I mean, it's going to be next to impossible. So you start getting behind in mortgage payments. You start, missing a few here or there. You might be better to sell your property than to let your credit take an absolute bath. Like you might be better to sell that property and get out from under it. Call us sooner than later.
Agreed.
Sure.
Coming back from the break, let's talk about some of the options that people have mortgages if they're struggling right now.
Have a question, head over to realestateandmortgageshow.com or 521-TALK, 521-8255. We'll be right back. I still can't believe to this day how fast this show goes. We're in the final segment of the day, this Thanksgiving weekend.
Over the years, like we're bordering on coming up on 19 years. And Frank, when we started, didn't have a gray hair.
Yeah, neither did you. You keep going with your silver fox, whatever color you want to make it.
I have more gray hair than anybody in this room. So
platinum blonde.
You go with platinum blonde.
I actually said to Petra, my girlfriend, the other day, I said, we were talking about someone else, and I said, that person has a lot of gray hair. I said, they have more gray than me. She looked at me, stared at me. She's like, nah, not even close, Paul. You're full gray. I'm like, well, you know what? Frank, for 19 years, you'd be full gray too.
Yeah, sure.
All right, to the phones we go. We got Chris from Elmont has a question for Frank on mortgage approvals. Hey, Chris.
Hey, guys. Hope you guys are having a good Thanksgiving weekend.
You too.
You too.
I have a mortgage that's up. It's up in 14 months.
Okay.
And I had a issue with Bell where they claimed they didn't receive equipment back, and they claimed it was the money, and eventually they sent it to collections. And due to that, I ended up settling with the collections company, and I do have my Interact e-transfer proof and all that.
Yep.
And then about a week ago, the collections company said, no, you still owe the money. We didn't receive it, even though I have all the proof. So I'm wondering, 14 months out, how that's going to affect me, what I need to do, who I need to contact.
Keep your paperwork. If you keep your paperwork and you show us that you've dealt with this issue, most lenders are forgiving on that front, as long as you've got paperwork. Where they're not forgiving is if you just tell us, well, this is what happened. Do you have anything in writing or an email?
But Frank, what does
or
that
anything?
do to his credit? What does it do to his credit?
Well, it might affect his credit, but if you've got something in writing, then again, the lenders are able to overlook it and say, you still need to deal with your credit with the credit reporting agency and try to get it fixed through the collection agency. But at the very least, we're not going to hold it against you on your renewal, especially if you want to shop around for a mortgage somewhere else.
But I would do it sooner than later.
100%.
I wouldn't wait. I wouldn't wait.
You got 14 months, so there's lots of time to get this rectified. But if it doesn't, I've had scenarios where clients have said, "Listen, I paid you. We had a settlement. There's not a chance in hell that I'm going to give you another $1. So you want to leave it on my credit bureau? You go ahead and leave it on my credit bureau, but you're not getting another $1 from me because they're going to stand." And it sounds like you might be in the same position. Listen, we made a deal. I paid everything. I've got proof. Now you're trying to extort me for extra money. Not a chance. I'm not going to give you another $1. Good for you. This is our job then to go to the lenders and say, listen, they're standing up for themselves. And I think if you as an underwriter, if you're in the same shoes as this client is, you would probably do the same thing. So I need you to understand what the client's going through and not hold this against them.
But does he pay this money right now? They're
I wouldn't.
No, if you have the proof for it, absolutely not.
Yeah, if you had a settlement and you paid it, hey, you've done your end of the bargain. And listen, I see this all the time. Rogers and Bell specifically are horrible at it. Like, people close accounts and then they don't close it on their system, and then all of a sudden you get these collection agencies to call you, and where you thought like everything was settled, and all of a sudden now you're having to make a tough decision, and these collection agencies do not let go of this because that's the only way they make money is if they collect. So they just continue to hound you and threaten to have it on your credit bureau. And it's unfair. Canadians, I think, need stricter rules for a collection agency to be able to go after you and ruin your credit rating for something that maybe you didn't do anything wrong.
Yeah.
Yeah. So if I have the email from them with what they want for the settlement and my proof of Interact e-transfer,
Yep.
like
that should suffice. That should suffice. If I had that and I went to a lender, I'd say, hey, look, clients done everything they were supposed to do, and now you've got a collection agencies that being overly aggressive and trying to take advantage of them, and I'm with the customer. I wouldn't pay them anymore.
Keep an eye on your credit, though. Keep an eye on your credit. Make sure it doesn't take a dip, and just keep an eye on that.
For sure. Thanks for the call, Chris. Appreciate it.
Yeah. Thank
Hey,
you.
Frank, is there a route for people to go through directly to the credit reporting agencies?
Equifax or TransUnion, there is. It's painful.
It's
and you got to
torture.
stay on top of them.
It's torture.
You really got to stay on top of them, and you got to have everything in writing. So make sure that, anything that happens verbally, translate it to an email and say, hey, whoever you talk to, hey, can I get your email address so I can just send you a quick email? Just again,
confirming
what we talked about. And if you can just, write me back, I'd really appreciate it. So that you've got something in writing should something go sideways, because, all these companies tell you your message is being recorded for quality assurance only if it works to their favor,
right?
Because somehow if it's something that you're claiming, though, I've seen it many times where they say, sorry, we only keep the recordings for 15 days or 30 days, and this happened 38 days ago, but they keep it for longer only if it benefits them. So that's what you got to be careful with.
Right. All right, Frank, birthdays this week?
Yeah, I got a couple of birthdays. Rachel Claremont celebrating her birthday this week. So happy birthday to Rachel. She's been with us for a long time. My sister-in-law, Pina, celebrates a milestone birthday. So happy birthday to my sister-in-law, celebrating her this week. And, you're much younger. I don't know that you're better looking, but Steve Gregory, our host, is celebrating his birthday this week. So miss him. I hope he's with family, with his daughters and grandkids in Toronto celebrating Thanksgiving, because he certainly
earned these Saturdays off.
Absolutely did earn these Saturdays off. And happy Thanksgiving to everyone. Celebrate your families. Celebrate your friends, and celebrate everything we have.
Can I get a birthday in first, Frank? Steve, happy birthday, brother. I know it's Friday, and we'll be thinking about you.
Yeah.
This is the time of year where 3 years ago, Tracy Arnett and her agent started coming over to Paul Rushforth Real Estate and joining my company. And so this Friday, Glenn Tomlinson, the first one that came over, celebrates 3 years with the company on Friday. That's crazy how quick that went, too, eh?
It is crazy.
Can't believe it's been 3 years.
3 years. So.
All right. Just a reminder, if you have a question this week, send it over to realestateandmortgageshow.com. Have a great week, everybody.
Yeah,
have a great week, everyone.
And continue to support local businesses and charities, everyone. Happy Thanksgiving.